morning from our global headquarters in New York. I'm Danny Berger. Manish Krani is on assignment today. Welcome to Bloomberg Brief. Let's set your agenda. Leaning towards a cut, Fed Governor Chris Waller supports a December rate cut ahead of a big week for jobs data. A big boost, Elon Musk's SpaceX is said to be selling insider shares at a $350 billion valuation. And it's the moment of truth. The French government on the brink of collapse as parties fail to agree on a budget bill. Another record high is in for this equity market, not just for the S&P, but for NASDAQ and Mag 7. They have their own records. Little change this morning, led by small cap futures. Citi this morning saying that short sellers have capitulated and investor positioning in the S&P 500 is completely one-sided. Meanwhile, yields inching higher for this treasury market. The weakness in the front edge yesterday got us closer to reinverting. It is the long end that's leading the pain this morning. We did price in more cuts after hearing from Waller yesterday. Meanwhile, the euro, that is also under pressure. The French government nearing a collapse. The biggest daily decline for the euro versus the dollar since Trump's victory. There's no obvious sign yet of contagion to other European assets, but the opposition party backing a no confidence vote, putting in threat a caretaker government and no cohesion. That's the situation in Europe. Here in the U.S., markets are looking ahead to non-farm payrolls data this Friday for the latest clue on where the Fed may go. Economists expect to see some strengthening in the jobs market. 3 Fed officials yesterday hinted that they see more rate cuts over the next year. Here's what Fed Governor Christopher Waller said, speaking at a conference in Washington.
At present, I lean towards supporting a cut to the policy rate at our December meeting. But that decision will depend on whether data that we receive before then surprises to the upside and alters my forecast for the path of inflation.
Joining us now is Ella Hoja, head of fixed income at Newton Investment Management. So Ella, Waller still dependent on the data, but leaning towards a cut this month when many people had thought maybe it would be a pause. How are you thinking about December and how it sets up policy for 2025?
December looks more like a done deal, and I guess the markets are sort of leaning that way, not fully perhaps, but leaning that way. And that's because it's being guided in terms of, Fed policy. Going forward is an entirely different game, right? So we have additional information from a macro perspective, and markets are thinking that growth might be a little better, perhaps inflation a little bit more sticky, as Waller alluded to, in terms of the further gains on the inflationary side are more minor going forward. And so with that in mind, you have to question whether you're going to get the additional cuts priced further out beyond December, I suppose. And I think that sounds fair to us, at least temporarily for the next quarter or so.
I mean, Waller said it, to your point, saying that, this gives us ample scope if they cut in December, ample scope later to slow the pace of rate cuts if needed. Ella, is 2025, how realistic are more robust rate cuts, not just because of inflation, but because of the political economy and the unknowingness of what happens with tariffs and the impact on inflation?
Yes, lots of unknowns. Macro is complex on a standalone basis, and if you throw in those structural questions that might come to play with the upcoming policies of the new government, then you have even further complexity added. So, I think initially that's why I think the same way the Fed is data-dependent, markets will be very data-dependent. So far, data has been supportive of the narrative of potentially better growth, potentially a little bit more inflation, but nothing drastic. And so we have to watch labor markets. I think jobs data very, very important going forward. So I think that will be key for markets. And of course, sensitivity to inflation. Now, a lot of the policy setup that's coming forward, complex it may be, but there are parts of it that are less growth supportive, certainly in the first half of the year. And so we might find a few surprises, a little bit like this year. We've gyrated, if you like, between soft landing, no landing, and hard landing narrative. I do suspect that we will do a little bit of that next year as well, at the very least, but perhaps we may break the ranges. We'll see which way, but I think there is certainly a fatter tails narrative into next year from our perspective.
Great, because, we didn't get enough narrative ping pong as it was in 2024. Ella, though, you lay out in your research a story of two halves for 2025, at least when it comes to corporate issuers. This idea that a lot of people are going to front run any of the risks in the back half and issuance for corporate credit out in the first half. How do you see that breakdown happening? Do the real risks come to fore just later in the year next year?
From the growth side, I expect so, yes. From the sort of more markets related side, perhaps in the first half of the year. So there is very much a bit of a boom bust risk here, right? So if we keep running with the sort of momentum we have in risky assets, as we know, in credit markets, spreads are very compressed. In equity markets, momentum is very supportive and is very much in favor of the US market. So you have a bit of a risk coming there. And would you just mention that corporate supply is likely to go up? There's a lot of M&A activity, so that will bring more investment grade credit supply to the market. So some concessions need to be in place for that. And last but not least, we mentioned the Fed. I'm not so sure that risk will particularly like it if we start taking too many of those cuts out of the table. So we'll have to see how risk responds to potentially a front-end repricing of the curve, which I suspect we are seeing already, and we might see more of into next year.
So you get this deluge of issuance because M&A is back, but with spreads already, as you point out, Ella, and you say dangerously tight, can you really just sit back and add to credit exposure at this point?
We have to say it's getting harder, right? And probably for the first time in 2 years, you look at a lot of the strategists on the sell side, they're starting to get a little more concerned about valuations and are forecasting slightly wider spreads next year. It's nothing drastic. We're talking pretty mild widening, but still, the psychology seems to be shifting. So with that in mind, if investors are a little more nervous and valuations are tight, you don't need much to disrupt that. Now, having said that, we're not sort of getting super bearish here because there is still a component of carrying credit, and data is still, as we said, supportive for growth. So it's still a supportive environment for credit, but we're definitely getting more cautious here and trying to take the chips where we find some of the bonds that are more richly valued. We are taking profits on those.
Speaking of getting more cautious, Ella, in Europe, something completely different is unfolding, and that is a government that seems like it's becoming ungovernable in France. You're at a point where the France-German spread is at its widest since 2012. At what point can you take French risks? Do yields become attractive enough that you can jump into that market?
Well, it's hard to be very constructive on the spreads in France, and I think that's predominantly because when you look technically, this spread widening is quite concerning for market watchers such as myself who lived through the periphery crisis. We definitely have not seen this type of dislocation before, so you have to sort of at least pay attention to it. So we've predominantly been playing this on the short side ever since the summer, so that was not a changing view. It actually worries me to a large extent. Now, more broadly on European assets, I do believe that the first quarter into the second quarter is a good opportunity to start, chipping in or start adding exposures there. I think we're close to peak bearish momentum in Europe. You look at the currency, you look at equity markets, even the concession in some of the credit markets is nothing, screaming out at you, but there is some concession there. So I think, if you want to be a contrarian investor, you probably have to come in when, people are probably scared to go and buy. But having said that, I'm not so sure that buying France here, it would be that bottom fishing, if you like.
Okay, Ella, great to get your thoughts this morning. Thank you for joining us. Ella Hoja of Newton Investment Management. Let's get you some other stories now that are trending on the terminal this morning. China has announced it will ban several materials that have military uses from being exported to the U.S. It's a tit-for-tat move after the U.S. escalated chip curbs yesterday. Materials such as gallium, germanium, and antimony and super hard materials are not allowed to be exported to America as an overall principle. Elsewhere in China, leaders are planning to start the annual Central Economic Work Conference next Wednesday. There, they plan to map out economic targets and stimulus plans for 2025. All of that according to people familiar with the matter. Expectations are high, though, to keep next year's growth goal in line with the 2024 target of around 5%. Deliveries from Tesla's Shanghai factory fell for a second month. That's despite a boost in subsidies from the Chinese government to encourage consumers to buy more EVs. November shipments fell by more than 4% year on year. Tesla will have to sell a record number of EVs globally in the final quarter to make good on its annual sales guidance. Coming up, the moment of truth. France will hold a confidence vote on its government tomorrow. We're going to have more on that next. And later in the show, we're going to catch up with Keith Lerner of Truist on his thoughts on risks going into 2025. All of that to come on your Bloomberg Brief.
This bill is now here. Now is the time to act to implement it. I believe we've now reached a moment of truth which confronts everyone with their responsibilities. It's now up to you, members of the Parliament of the nation, to decide whether our country adopts responsible financial texts, essential and useful to our fellow citizens.
That was the French Prime Minister speaking after forcing through a divisive social security budget without a vote. In response, French lawmakers will hold a no-confidence vote tomorrow, threatening to topple the government. Joining us for the latest on the political crisis in Paris is Bloomberg's Caroline Conan. Caroline, great to see you this morning. How close is this government to dissolving?
It's very close, Danny. It would take a miracle, actually, to save Michel Barnier at this point, because we already know that the National Rally of Marine Le Pen is going to join forces with the left-wing alliance, and they will have together a majority to topple this government. So you can see the front pages of the French papers this morning. This one, for example, saying Le Pen is condemning Barnier, and that's pretty much what's happening until the very last minute. The Prime Minister Michel Barnier on Monday afternoon really tried to give some concessions to Marine Le Pen, including on drug reimbursement, which was one of her key requests, her key demands. But in the end, she wanted more. She wanted to add at the last minute an amendment on raising all pensions from January. The amendment came too late, couldn't be included in the bill. Michel Barnier had no choice but to provoke himself this vote of no confidence, which, as you said, will happen on Wednesday, tomorrow, 4 p.m. French time. That is 10 a.m. New York time. And the chances at this moment of a government collapse in France are very high. It's almost inevitable.
What does it look like if we do get that collapse, Caroline? And in France, you can't have another election until July. What happens in the interim?
So in that case, of course, Emmanuel Macron, the president, will have to name a new prime minister. That could take a while because, remember, after the snap elections in July, it took him actually 2 months to choose Michel Barnier, because the problem is that even if he changes prime minister, there's still no majority in parliament, and you cannot call new snap elections, new parliament elections, until at least July 2025. So basically, there are two options I can see at this very moment. One is obviously whatever the left wing is calling for Macron to resign. Obviously, this is unlikely to happen because part of the moderate left wing, the socialist, doesn't want to see this happen. But then the only alternative, really, if the National Rally wants to support this motion of no confidence and probably support the next prime minister in that case, would be for the next prime minister to be perhaps from the center left and create this wide coalition that goes from the center left to the Republicans that we were expecting actually after the results of the snap elections last July. But again, it's a very big gamble. They're going to have to agree on a lot of things in order to make this happen. So we are kind of plunging in a little period of uncertainty. And, you know, it's actually interesting. I was reading Bloomberg Economics analysts who are saying that given Marine Le Pen, as you know, could perhaps be banned from running for office for the next 5 years, if she is condemned in this trial, we're going to have the verdict at the end of March. So perhaps, according to Bloomberg Economics, Marine Le Pen prefers in the short term to have chaos rather than stability.
Caroline, we appreciate that update. That is Bloomberg's Caroline Conan in Paris. Now, a quick check on the euro this morning. Yesterday, it posted the biggest daily decline since Trump's victory. It is clawing back some of those losses, but still at 105. We were speaking to Valentin Marinov of Credit Agricole yesterday, who said the bad news is already priced into the euro. Perhaps the benefit for these markets at the moment is that there is no contagion, that this seems really to be confined to French bonds, rather, the Franco-German spread for the 10-year, hitting the widest since 2012. Ella Hoja of Newton Investment Management saying she is still cautious. Those yields would still not make her a buyer. Your Bloomberg dollar spot weaker this morning by 0.1%. Okay, coming up, launching higher, SpaceX is said to be mulling a tender offer at a $350 billion valuation. We have more on that. Plus, Musk getting his pay package shot down by a Delaware judge. All that to come on your brief this morning. This is Bloomberg.
And unfortunately, we did not have a...
It's your Bloomberg Brief on this Tuesday morning. I'm Danny Berger in New York. A quick check on your markets for you. S&P 500 futures slightly in the green this morning. Your Bloomberg dollar spot that's weaker as the euro takes off after the worst day for the euro since the election. Your 10-year yields, those are up 2 basis points. 4.2% is where we stand. There was a under pressure yesterday, despite Waller saying that cuts are coming. But it all depends on the data. We, of course, get jobs on Friday. The estimate is 218, the median estimate of analysts. Okay, let's get you some front page news, a look at what's making headlines around the world. First up, the Wall Street Journal leads with this, that the Ukrainian President Volodymyr Zelensky has signaled that he is open to negotiating a peace deal. He suggested that he would accept a ceasefire if his country obtains NATO membership. For most of the war, though, he had insisted that Ukraine would keep fighting until it had reclaimed the roughly 20% of the country that's now under Moscow's control. Next up, the AP has this. The president-elect Donald Trump will attend the reopening celebration for Notre Dame's Cathedral in Paris this weekend. The cathedral is set to reopen Saturday after more than 5 years of reconstruction. That follows that devastating fire in 2019. Trump had praised Macron, saying that he had done a wonderful job ensuring that Notre Dame had been restored to its full level of glory. And we have this, Bloomberg leading with the scoop, saying that SpaceX is weighing a tender offer at a roughly $350 billion valuation. Now, that would be a significant premium to a previous valuation, a $255 billion, and that was reported just last month. So joining us now on this story is Bloomberg's Tom McKenzie. Tom, I mean, this is a big step up from last month. What's behind this big boost?
Yeah, it's a big jump, isn't it? As you say, from that premium of around $255 billion that was attached to the valuation of SpaceX just a month ago to around $350, a little over $350 billion right now in this secondary offering. What's behind it? Well, the assets of Elon Musk have performed very well. You just look at Tesla since November the 5th. That equity, that stock is up about 40% because of his ties, of course, to President Trump, because of the money he put to play in that election. And it's not wild speculation to assume that he may benefit from that proximity in the months and years ahead. SpaceX, by the way, since around 2018 has received about $20 billion of federal contracts. And again, you can assume that that probably continues given the proximity to the president. This is a secondary offer. The idea is to release some capital for early investors and also employees. The numbers could change, of course, and it hasn't yet been finalized. But again, the valuation right now, about $350 billion, which, by the way, is in ballpark valuation of something like Bank of America. And it once again reinforces that SpaceX is the most valuable privately held company globally.
Well, while SpaceX becomes more valuable, Elon Musk's net wealth just took a hit. The record-setting Tesla pay package, once again, Tom, being struck down by a Delaware judge. Musk saying on X that it's absolute corruption is his response to it. How much of this is a setback for Elon Musk?
Yeah, it's all in degrees, isn't it? Given that he's still worth about $350 billion himself. But clearly, as you say, given his response on X, he's not happy with the ruling. The judge in Delaware reiterating her finding of back in January. It's the second time now she's shot this down. And back in January, she found that the board of Tesla was improperly influenced by Musk when they made this decision, this extraordinary award of options at the time worth about $2.6 billion back in 2018, valued at about $56 billion when she made that original ruling in January. As of the close of yesterday, those options would have been worth about $100 billion. She again has ruled that that original ruling stands, that this pay award should not be awarded to Musk because of that, what she describes as improper influence. The board, by the way, say they are going to go to the Supreme Court of Delaware. They will challenge this, and that could take months to play out.
Yeah, and presumably, Tom, they need to come up with a new pay package now for Musk?
That looks like what is going to happen in possibly in the near term as they go to that appeal. It's worth noting that Musk took this after the January ruling to shareholders, and he got the majority of shareholders to back the package. He then said, right, go back to the Delaware court. This should change and move the dial. That is not how the judge interpreted. She said, just because you go back to the shareholders and the shareholders approve it, does not undermine my original ruling back in January that the board in 2018 was improperly influenced. So again, we'll watch how this plays out, but it could be some time coming before he gets that pay package, if at all.
Yeah, and we know Musk moves his companies out of Delaware, has encouraged other businesses to do the same. This will probably just kind of fuel that animosity. Tom, thank you so much. We'll catch up with you again later. Bloomberg's Tom McKenzie. Coming up, we catch up with Keith Lerner from Truist on the year ahead. This is Bloomberg. From our global headquarters in New York City, welcome to Bloomberg Brief. I'm Danny Berger. Let's set your agenda. Leaning towards a cut, Fed Governor Chris Waller supports a December rate cut ahead of a big week for jobs data. A big boost, Elon Musk's SpaceX is said to be selling insider shares at a $350 billion valuation. And it's the moment of truth. The French government on the brink of collapse as parties fail to agree on a budget bill. Your equity futures session this morning, slightly positive after yet another record high. Nasdaq and Mag 7 also hit another record high. Nasdaq futures, those are basically unchanged, slightly weaker. The whole picture basically unchanged. But Citi points out that the shorts keep capitulating. They figure that for the S&P 500 futures index, that it is the most one-sided, completely one-sided that it could be. For this Treasury market, under a little bit of pressure this morning, yields inching ever so slightly higher, led by the long end. Your 10-year yield up 2.5 basis points, 4.2%, despite yesterday getting a backing from Chris Waller saying that it looks like a cut is coming, dependent on the data. That data will come on Friday in the form of jobs data. 218,000 is the expectation. The euro also clawing back some of the ground it lost yesterday. It had its worst one-day performance since the Trump victory. That all had to do with France. France heading to a no-confidence vote tomorrow. It looks like the government will dissolve. So far, though, no wider contagion on the rest of Europe. Well, as we head into the end of the year, it is the season for looking forward to 2025 and what it could bring. Keith Lerner of Truist staying cautiously optimistic as we enter, or stay in this final month, rather. He writes, as we head into 2025, we remain aligned with the primary market uptrend as opportunities remain. Yet investors will need to navigate a delicate landscape where opposing forces create tension, much like a bull in a china shop, strength surrounded by complexities. I'm pleased to say that Keith joins us now, who is the co-CIO of Truist. Keith, I mean, that is just the perfect analogy for this moment. But in this moment of fragility, we are getting sell-side note after sell-side note saying expect big gains for 2025. Yardeni and Deutsche Bank are at 7,000 for year-end. The consensus is 6,500. How confident are you that the bull market can continue, and not just continue next year, but continue at pace?
Yeah. Well, Danny, great to be with you. It is, 2025 target season. We tend to focus more on just the way of the evidence and following the trends. And to your question, I mean, our mantra this year is to stay aligned with the primary trend. And as we head into next year, that primary trend is still positive. So until that way of the evidence shifts, we want to stick with it. As you mentioned in the intro, I mean, it is a delicate balance. We know there's going to be, like we call it, a bull in a china shop. So you're sticking with that bull market, but it's delicate. There's some things that could be broken, right? A lot of policy uncertainty, wider policy outcomes. But if I zoom out a little bit and just say, okay, let's think about this bull market first. Where are we? The current bull market is up about 70% over the last 2 years. The historical average for a bull market, which is just the starting point, is tend to last over 4 years and tend to gain over 100%. On a 3-year basis, this market is only up about 38%, which is slightly above average. But we have to remember we had that really tough 2022. So yes, markets have come a lot the last 2 years, but when you zoom out over the last 3 years, not as extended. Valuations certainly rich. Sentiment, as mentioned earlier, definitely more becoming more of an extreme. So that bar for positive surprises is somewhat higher. But all in all, I think it comes back to the economy. The market tends to rise if the economy is expanding, which should support corporate profits, So I guess to wrap all that up in a bow is that we still think the primary trend is higher, but we're probably going to see some disruptions along the way, which will likely provide some tactical opportunities.
Well, the economic data, the earnings, that is the thing that powered this market in 2024, when consensus going into it had been perhaps more bearish than the starting point of today. To what degree does that continue to be the driver, Keith, versus political headlines, versus uncertainty of tariffs? To what degree do you see that having the ability to bully this overall market in 2025?
Yeah, I think the ride next year will likely be somewhat bumpier because we have this tension that we discussed, right? We know what that is for the most part, right? We know that the positives on some of the policy side is likely a little bit lower taxes, maybe some deregulation, but we also know the other side of this is the uncertainty around tariffs. So far, last week there was some, I will call them tariff tape bombs, and the market actually held in relatively well. We'll see how that continues next year. And then also, we have to keep an eye on inflation and interest rates. So I think that tension will be there. But, if we look at the economy, where our house view is the economy to grow about 2.5% next year, stocks tend to climb about 85% of the time when the economy is expanding. So I don't want to lose sight of that. And I'll also say, even though there's probably going to be more disruptions, what we have seen over the last couple of years is not to underestimate the resiliency of the U.S. economy. If you think about the once-in-a-generation pandemic, the highest inflation since the 70s, we've seen this economy continue to push along. And even in the fourth quarter, the Atlanta GDP estimate is above 3%. So I think that will be the key, and also then that translating into profits that continue to grind higher.
But that in contrast to what's happening in Europe, to what's happening in Asia, and that's led to the Buy U.S. American exceptionalism narrative really taking off. Keith, there's at least one person who has been willing to call it a bubble. That's Ruchir Sharma, chair of the Rockefeller International. He wrote in the FT, I just want to quickly read this to you and get your thoughts. He said that the overwhelming consensus is that the gap between the U.S. and the world is justified by their earnings power, their global reach, and leading role in tech innovation. These strengths are all real, but one definition of a bubble is a good idea that's gone too far. America is overowned, overvalued, and overhyped to a degree never seen before. I'm guessing you might take issue with that, but what do you make of this idea that, yes, the U.S. is exceptional, is just a narrative run too far?
Yeah. Well, first, that's the bear case in the U.S. And I think it's an interesting one to kind of tackle. First of all, I will just say we've been Team USA for several years, so it's not a new stance for us. I still think, if you look at why has the U.S. outperformed relative to global markets, if you overlay just simple earning trends have been much stronger. So the relative performance has coincided with that strong earnings. That's likely set to continue next year with our economic outlook, and Europe still somewhat struggling. The other thing that tends to coincide with U.S. outperformance is strength in the U.S. dollar. So if you overlay the U.S. dollar with the relative performance of the U.S. versus international, that's the same thing. So for that to really change for the U.S. to underperform in a meaningful way, I think you'll need dollar weakness. You need the earnings to move down. And then probably one of the biggest things is the sector allocations. Tech is a much bigger sector allocation in the U.S. So far, we're still positive on tech. We don't see this in a bubble. In fact, going back to those 3-year rolling returns for tech, it's not anywhere close. In the late 90s, tech outperformed by over 250% on a 3-year basis. Today, it's around less than 40%. The one caveat I will say is on a short-term basis, the relative underperformance is getting stretched. So I think you could certainly see some mean reversion, some sharp bounces, maybe even early in the year. But the fundamental primary trend is still with the U.S. in our view.
Keith, can you go through some of the other sectors you like? Because I know you're looking elsewhere, not just tech, as we head into 2025.
Yeah, well, we've been overweight tech, and we're still there as well. We also like financials on what kind of what the narrative has been more recently. We were bullish before the election, but that kind of amplified our view. I do think we'll see deregulation, a little bit of a steeper yield curve, a pickup in M&A, so that should be positive for financials. We're overweight communications, which is kind of alongside tech, which is kind of, if you believe in the AI story, if you believe in the bull market, the AI story likely has further to go. The earnings are still there. We still think that continues. And then lastly, we have utilities, which is a little bit of an AI play, but also a defensive play. So if we have this kind of, you called it earlier in the program, ping-ponging. You want to have some growth. You want to have some defense. You want to have a little bit of cyclicals as we see that ping-ponging continue.
Keith, it is always a pleasure to catch up with you. Looking forward to doing it much more often in 2025 as we deal with the pings and the pongs. Keith Lerner of Truist there. Okay, coming up, a Delaware judge rejects Elon Musk's multi-billion-dollar Tesla pay package. We're going to bring you the details next on your Bloomberg Brief. It's your Bloomberg Brief. Danny Berger here in New York. China has responded to President Biden's escalating curbs on the country's access to tech. Beijing announced an outright ban on exporting several materials crucial to chip making to the U.S., citing military concerns. Joining us for more is Bloomberg's Meghan Crane in Washington. Meghan, you have President-elect Trump re-entering the White House next month. And this time around, the relationship between the U.S. and China looks very different than the one that he got in 2016. How does this already a tit for tat between Washington and Beijing set up a Trump administration?
Yeah, good morning. So 8 years is a long time in geopolitics, and the president-elect, like you said, is entering the White House with a totally different, well, not totally different, but very different outlook sort of with China, which has been a complicated issue for him his entire political career. He, is a longtime China hawk. He loves to complain about China. He blamed China for COVID. But, as a pro-business president-elect, he certainly is trying to serve U.S. businesses as well in their hope for Chinese markets and Chinese customers. So it's a bit of a conflict for him. This tit for tat on technology sets that up, right? This sort of conflict as to what we want to provide for them, what they will hold back from us. And it just continues the rhetoric from Trump.
Right. And, I just wonder, Meghan, considering we have this at this moment, how different will the Trump presidency in terms of reacting to China be from Biden? What noise have we heard already so far from the incoming Trump administration?
Right. Well, Trump loves tariffs. He loves to talk about tariffs. He loves to threaten tariffs. Whether they will be implemented on China broadly or more narrowly is sort of remains to be seen. That it's hard to predict what Trump will do. January is a long time from now, but he has definitely talked a lot about implementing broad tariffs against China in a protectionist sort of position.
Well, he has also doubled down on opposing Trump, that is, on opposing the sale of U.S. steel to Nippon Steel. And in it, Meghan, he talked about tariffs, tax incentives as a fix instead. What exactly is he proposing?
Well, like you said, tariffs and tax incentives to keep U.S. steel in the United States. Interestingly, that's a position that he, not the tariffs, but the idea that U.S. steel should stay in the United States. He shares that position with the President Biden, who, has not vowed to block this sale specifically, but has definitely said that he thinks U.S. steel should stay in the United States. So, or U.S. owned, excuse me. So I think that that's an interesting place where they actually seem to agree. How to implement that and how to make that happen is obviously unclear and has a different path for both parties, I assume.
And again, Meghan, we've been really parsing if I can just jump in, parsing the policy, not just on what Trump says on social, but who he's putting into his cabinet, who he's nominating for various positions. He truthed, I suppose, yesterday, talking about the hostages in Gaza, saying that there will be hell to pay in the Middle East if they're not released by January 20th. What sort of position do we see Trump, again, not just on what he's putting on the internet, but also those he's put in power and his posture towards Israel, towards Gaza?
That's a really good question. Trump has been very clear that he supports Israel and their actions in Gaza and supports Netanyahu. I think that the announcement yesterday that an American-Israeli dual citizen had been killed on October 7th, that he had been believed to be a hostage. I think that sort of escalates the tension for Trump. And it's unclear sort of when he says hell to pay, what that would be in addition to what's already happening in Gaza. They've taken out the leadership of Hamas. There's not a lot of Gaza infrastructure remaining. So what he's talking about is unclear, but he definitely seems to be doubling down on his support for Israel and their actions.
Megan, really appreciate it. Thanks for getting up early for us. That is Bloomberg's Megan Crane in Washington, D.C. Okay, now to bring you a Bloomberg scoop. SpaceX is weighing a tender offer, and it would boost the valuation of the company to around $350 billion. That's according to Bloomberg sources. Joining us now is Tom McKenzie. Tom, this is a much bigger valuation by almost $100 billion than what we expected them to get last month. What's behind the valuation?
Yeah, from 255 billion last month to around 350, just north of 350 billion now. Again, according to our sources, according to our reporting, and that, of course, could change. It's a secondary offering. The idea is you release capital, liquidity for early investors and employees as well, so an incentive there. What's behind it is really the expectation, the optimism around essentially anything that Musk touches now that he has that proximity, of course, to incoming President Trump. You've seen just Tesla's shares, for example, just alone have rallied around 40%, little over 40% since November the 5th. So the valuation of SpaceX has increased as well. Look, it's a company that's performing very well as well in terms of getting satellites into orbit. They have about 6,000 satellites into orbit. And of course, the rockets as well, that part of the business. And we've seen that recently in the last few weeks with Trump on the ground witnessing one of the most recent launches. This is also a business that since its start has benefited from about $20 billion worth of federal contracts. And again, it's not wild guess to make and a wild assumption to make that given where Trump sits now and his proximity to Musk, I should say Musk's proximity to Trump, that those contracts will continue to flow to SpaceX. So it may be also a bet on that front. It really just underscores this is the most valuable privately held company in the world right now. $350 billion US dollars. That is about the market cap of Bank of America for perspective.
Well, one win for Musk and one loss for Musk. His record-setting Tesla pay package was also struck down once again by a Delaware judge. What now, Tom?
Yeah, second time for Musk on this front from the same Delaware judge, I should say. Going back to January, that's when the initial judgment came through from this Delaware judge, ruling that this pay package that was awarded in terms of stock options for Musk worth then about 56 billion, but worth 2.6 billion back in 2018 when it was originally structured, that the way that was structured, the way the board came through with that pay package, that the board was improperly influenced by Musk at the time in 2018. The valuation, of course, the value of those stock options was about 56 billion by January. It's about 100 billion by the end of the close yesterday. This is the second time then the judge has thrown this out saying, look, you went back to the shareholders, even though the shareholders approved this, that does not undermine and detract from my original ruling that the board members were improperly influenced by Musk at the time, back in 2018. So it's back to the drawing board to some extent. The team at Tesla, so the board, have said they are going to appeal this with the Delaware Supreme Court, and that is a process that could take months.
Tom, appreciate it. That is Bloomberg's Tom McKenzie. Now, also keeping an eye on Intel this morning. Shares pretty steady this morning, pre-market up almost 1/3%, but it had a roller coaster session yesterday. After a forced exit of CEO Pat Gelsinger, the stock is currently at a year-to-date decline of more than 52%. Joining us now is Bloomberg executive editor for Global Tech, Peter Elstrom, who's been following the story. I mean, Peter, at first we knew he was leaving, and then later we learned that he was forced to go. What do we know at this point about his resignation?
Yeah, so we got this announcement yesterday morning where the company came out and said that Pat Gelsinger was retiring. There were very complimentary statements from the company and then also from Pat himself, who talked about how happy he was to lead the company. But behind the scenes, there was much more tumult. As you mentioned, the stock is down substantially. What our sources have told us is that this came to a head last week at a board meeting where Gelsinger met with the board of directors. He expressed what he thought was optimism about their progress. He felt like they were beginning to gain some ground on some of their competitors. The board felt like it was not going fast enough. They were disappointed with the progress. And in that context, they gave him this ultimatum of either he could retire, announce his retirement, or he would have to help with a search for his successor. He ended up making the decision to resign at that time and step aside. So now the company is in this position where they need to find a new CEO, and they also need to find out whether they're going to stick with the strategy that Gelsinger laid out or whether they're going to shift course here.
can you talk about what shifting course would mean? Because Gelsinger's strategy had been do deals with Apollo, move forward, maybe don't look at that Qualcomm, as Bloomberg reported, a Qualcomm bid for Intel. Does all of that possibly change? Do they do something more radical now, Peter?
Well, Gelsinger's aspiration was really to bring Intel back to its days of glory. This is a company he worked at for a long time. He started when he was very young working at the company. He wanted to keep everything together. He wanted to build the foundry business. That's the business that Taiwan Semiconductor is in that's proven so successful. We've really seen this evolution in the chips business where people do production on one side and design on the other side. Intel has always done it together. They've been very proud of their manufacturing capabilities, but they've fallen behind TSMC, and NVIDIA, which does designs, is now the most valuable company in the world. They've lost a lot of ground to them. So he wanted to keep it all together and build a stronger foundry business. Now as he departs, you can certainly see options where perhaps they would separate those two businesses. That's been talked about quite a bit. There are also a couple of subsidiaries, the Altera business, the Mobileye business, that they could end up selling off if they wanted some more dramatic structural changes here. But first, they need a CEO. They need somebody who's going to make these decisions.
I have to say, Peter, it feels like every company is looking for a new CEO. Stellantis, also we learned yesterday, needs a new CEO too. When it comes to Intel, what kind of candidate might they look for? Maybe it's too early to say, but is this an internal candidate? Do they look for someone externally that can turn around the company?
Well, this is a very challenging situation to step into. Intel has been losing a lot of ground. Typically, if you want to change a business, you don't want to go inside, you want to go outside as a rule of thumb. So they probably are going to have a very broad look at who is available out there. They have the co-CEOs now who have stepped up internally. Those will certainly be candidates for the company, but they're also almost certainly going to look outside for somebody who can come in, make some of these tough decisions about how strategically they're going to change. If they want to get stronger in the manufacturing business, you could see them looking at some of the big players, the successful players in that space, like a TSMC or a Samsung.
Peter, really appreciate it. Peter Elstrom there, our global tech lead. Coming up, JOLTS numbers, Fed speak, all that to come on your trading diary on this Tuesday morning. Just about 3.5 hours until your opening bell. Let's get you set up for your trading day today. First, JOLTS job data. That will come out at 10 a.m. Eastern. Then we get some Fed speak. Governor Adriana Kugler at 12:30 p.m. Chicago Fed President Austin Goolsbee at 3:30. Then Salesforce reports after the market close. Let's quickly whip through some of the stocks moving pre-market. Tesla. China shipments have fallen for a second month. Those shares off 1.4%. Supermicro extending its rally after closing with a double-digit gain. They said that an independent review found no evidence of misconduct. Finally, wrapping it up with CVS Health up nearly 2%. Deutsche Bank upgrading to a buy, saying that earnings and the stock's multiples appear to be near trough levels. That's it for your brief. Surveillance will take the reins from here. This is Bloomberg.